welcome to a brand new show of Market and Makers with Sunil Singhania. We got Sunil back at a time when some would say that we are at a crucial juncture. Worst is certainly behind us. The economy has rebalanced itself after the Ukraine crisis. Same time last year, there was extraordinary spike in inflation, but now globally things are looking settled. But markets will always get something to worry about. Last time when we spoke to Sunil, we were worried about oil, commodity prices. Now markets have started talking about the importance of the electoral cycle and the outcome of state election and what will happen to the general election cycle in 2024. So all that and much more with Sunil Singhania in this edition of Markets and More. Sunil, it's been a good comeback by the bulls. The Nifty is up 1500 points plus from the recent low. For a market where 6 weeks ago everybody was talking about breakdown, now we have a breakout in front of us. What to your mind which has changed in the last 6 to 8 weeks which has made bulls make such a strong comeback?
Good morning, Nikunj. Thanks for having me back. So, I think one thing we have to remember is that earlier, we used to have a 15-20% move in the market once in 2-3 years. I think we are in a zone where we'll have a 15% move in the market 2-3 times a year. And I think that is the reason you are seeing this bouts of, markets going down and coming up from time to time. The world is very correlated. I think markets are taking a cue from each other, and therefore you are seeing this sharp moves up and down. On the other hand, I think you are right. The things seem to be stabilizing in the world. Our view on oil has always been of a softer oil, and we still continue to believe that oil will settle more like $60-65 than where it was. It's already down to 70. The world also has started to believe that inflation has seen its peak, and as a consequence of that, interest rate has also seen a peak. And on the other hand, you also have cost pressure which companies were facing because of raw material moves and freight moves and also energy costs. They are also stabilizing. And on the fourth side, you have China, which had a very strict COVID policy sort of reopening, and there is an optimism that there will be some growth there. So the world in 2023 second half should be much better than what it was in the last 1 year. And maybe that is a reflection which the markets are basically showing us. As far as India is concerned, result season has been pretty good. Obviously the very obvious sector, which was the financials, has done much more and much better than what was expected. And other sectors have performed in line or better than the muted expectations which the street generally had. And as we move forward, again, the optimism is that with interest rates coming off, so 10-year yields in India are down below 7%. Inflation has hit a significant low post the Russia-Ukraine issue even in India. And general optimism of good growth going forward. And the markets are looking with a lot of optimism. And the last thing is the 18 months we have not seen Nifty go anywhere. So we are still at the October 21 levels as far as Nifty is concerned. And in this last 18 months, we have had 6 quarters where cumulative earnings has gone up by almost 25-30%. So the Nifty P multiple on a 1 year forward, which used to be like 24-25 times, is down to like 16-17 times. So overall valuations also seem to be much more reasonable than what they were maybe 18 months back.
You started your opening remarks with a 15-20% move. It could happen 2 or 3 times in a year. It's like saying that your birthday may come once in a year, but you will get these big moves at least 2 or 3 times in a year. So if I look at the recent rally, looks like in this recent rally, which is the summer of 2023 rally, it still has some more headroom left.
I frankly, howsoever and how many times you might try, near-term moves are just a toss of a coin. And frankly, don't know. Geopolitical situation in the world keeps on giving you surprises and shocks from time to time. So don't know. But one thing is very sure that the appetite for Indian equity from domestic continues to be very strong. And from the global guys seem to be increasing, quite visibly. And I think that should ensure that markets are not going to come down in a hurry. And if we are lucky and if we have a good monsoon backed by good growth, which is sort of becoming visible, the government's resolve on spending money on infrastructure, which again is very visible, and corporate India also looking at expansion, which is also visible. I think we have a good sort of a mix of both macro as well as flows supporting the market.
Come back and I'm reading your note, the signing Shan random thoughts by Sunil Singhania. I mean, these are not random thoughts, these are very valuable inputs for everybody. You've come back from a long, if I may so, work holiday from New York to Omaha to taking a EV ride to spending time with your son Ujjwal.
Yeah, it was not a holiday, it was work. Obviously, when you're working during the day, evenings become holiday. But it was good, Nikunj. I used to be traveling to US maybe once in 3-4 months earlier. During COVID, you had a long break, and the last time I went was October 22. But things were not very open that time. So I think this trip was very insightful. You were able to meet people right from fund managers as well as allocators in New York. I met a lot of interesting people during the Warren Buffett, Charlie Munger's AGM in Omaha, and then in the Bay Valley actually saw the evolution of electric vehicles and the technology landscape in person. I think it's a big sort of a learning. So it was very insightful, and I think one thing which is very clear and which I mentioned in my note, that the move from dragon to elephant is very visible. I think across the board, allocators as well as investors are looking at some move away from their allocation to China into other countries, and India is coming up quite, I would say strongly up there. The other thing is obviously, this move towards digital technology, electric vehicle is for real. It's not going to go away. So you might argue that stocks are cheap, expensive in the near term. They might go up and down. But structurally, this move is for real.
So Sunil, if the India appeal is so strong and so encouraging, then why is that for 2022 we had a big fat sell number by FIs? And if I look at this year also, even though last 10-15 days FIs are back, on a net basis the number is still down 29,000 crore for the year.
कभी होता नहीं है.
Is my voice reaching you? Hi, Sunil, is my voice reaching you? Looks like we've got Sunil on a bad line. I'm just simply going through his notes, and the note is titled "The Singing Sun: Random Thoughts" by Sunil Singhania, and he's covered a range of topics in this. The move from dragon to elephant, the move that how EV is something which is real, and EV is something which will change the way how the transportation industry in the world would move. He's talking about a very simple things about takeaways from Berkshire Hathaway. Berkshire Hathaway is being successful in life is not doing too many extraordinary things, but doing things consistently well. Love for one work is greater satisfaction than all the luxuries in the world. Okay, Sunil is back. Sunil, in your note, and you've just highlighted that the India appeal and the interest towards India is at an all-time high. If that is the underlying mood, then what explains that big fat sell number for 2022? And even for the year, FIs may be back, but the number is still down 29,000 crore on a YTD basis.
So obviously, Nikunj, last 1 year has been a very difficult year. You had the Russia-Ukraine war, oil went up to 140, all the commodities went up sharply. And obviously, India was relatively doing very, very well. And it's typical that when you have your view on the global equity markets not being positive, and there is one country which does well. So one is the overweight increases, and the other is you tend to knock off what is doing well. So I think that was one reason maybe. And second is there is no one-on-one correlation on a day-to-day basis that if they are positive they will pump in like billions and billions of dollars immediately. It takes time. Obviously, India has always been an expensive country. It was very expensive maybe from their end last year. It is now at a reasonable level, and we are already seeing, this month we are almost seeing close to $800-900 million come into the country. So I don't know whether it will be near term or medium term, but we are very positive that over the next 18 months we should get back what we sort of lost in terms of outflows over the last 18 months.
Sunil, can I say that right now we are going through the phase of the market that markets are at an all-time high, but the commitment levels perhaps are at a record low. FIs have been net sellers, HNI activity has been low, FNO open interest has been low. So it's like saying that market ऊपर गया है, मगर माल किसी के पास नहीं है. Nobody owns stocks.
I don't think that is true. Yes, you can say that the overweight on India from foreign investors is not as high as it used to be. And therefore, there is room for some reallocation there. And as I said, the world dynamics are changing. We call it the 4D, in favor of India. One is democracy. I think the world has realized the importance of democracy post what happened in Russia and maybe a threat of what might happen in China. The second is demographics. I think India is going to be a young country at least for the next 20 years with a median age of like 30 years or lower. Third is obviously the huge domestic demand. And we always say that in 22, when the world was debating whether they will have a recession or they will just about have a 0% growth, in India the debate was whether we'll grow at 6% and 7%. And I think it's a great debate to have. And that was all largely because almost 80 to 83% of the Indian economy is domestic. And we have all seen how after 3-4 years post-COVID, we have started going on holidays, spending on festivals, weddings, and so on and so forth. And that is clearly visible in the strong domestic demand. And I think the fourth thing is the digital, benefit which the economy is getting. I think India has lagged in terms of physical infrastructure. We're trying to make up for that. But the digital infrastructure has been awesome. Tax collections are up 20% because compliance is higher. We have the UPIs and so many other things which have made India as an economy very efficient. And I think all this leads us to believe that if there is one economy, large economy in the world, which can continue to grow at 6-7% for the next 7, 8, 10 years, I think it is India. And if you grow that, the economy size almost doubles from 3 trillion to 6.5 trillion. And I think that is the kind of wealth which can be made. So it will happen. Obviously, as I said, India relatively turns out to be quite expensive. And therefore, investors take their time, before taking a call on whether to go all out or just start nibbling.
Sunil, since there is a very explicit mention of EV in your newsletter, let's understand that what is the best way an investor can really participate in the entire EV space?
No, in India, unfortunately, not too many direct plays. But, the biggest positive which I get from this is the fact that fossil fuel over a period of time is going to be weak. And I think from an India perspective, that is the biggest, good news that can happen. Already our services exports now are more than what we spend on oil imports. And I think that is the reason why balance of payment for India looks very, very healthy in 24. And again, that is one thing which is giving us a confidence that Indian rupee might be much more stable than other currencies in the world. So I think from an India perspective, whether you get opportunities to invest directly in EV plays or not, I don't know. But indirect benefit to the economy is going to be huge. And I think over a period of time, as the segment becomes bigger, we have already started seeing Teslas of the world looking at setting up base in India. And when that happens, I think even if no direct play, there will be a lot of indirect plays which will be available over a period of time. So it's still early days. There are a few auto companies who are trying to make their mark on the EV space. But I think over a period of time, we'll get an opportunity.
Sunil, you've been shopping a lot, and that's what the bulk deals are indicating, from Uniparts to Dynamatic Technologies, Mastech, Ion Exchange. In the small and the mid-cap space, are you following any kind of a theme, or these are company-specific investments irrespective of what the sector is doing?
So, Nikunj, we can talk about themes and all, but I think the biggest theme for us is as follows. We invest in companies which make profit, where there is visible profit growth, and what we pay today would be more than repaid back to us by way of future profitability. So I think across the board, across our names, I think these are the themes which you'll see in common. Obviously, there will be always some sectors which do well from time to time. I think companies which have done well for us are companies where there has been, good, I would say, respect as far as capital allocation is concerned and where there is profit growth. And companies which have not done well are the ones where profit growth has faltered. So I think this is a very simple way of investing, but I think simplicity works.
What is your view on banks, given that right now there is a consensus view that banks is the way forward? Credit growth is strong, NPAs are down, this entire 2000 rupee move by the government maybe could also help some of the banks in garnering deposits on the margin. Do you think banks is more like a consensus view and a consensus trade?
So obviously, any economy, in particular in a growing economy, financial services and banks will play a major role. I think when in Indian markets, banks and financial services are almost 35-40% of the economy as well as the markets. And so it is very natural for most investors to have a decent allocation to banks. I think having said that, there are a few things. One is, profit growth looks to be very strong next 2 years. Interest rate seems to have peaked, and at the margin, you might see interest rates coming down, and banks normally are inversely correlated to interest rate in terms of their price performance. Third, I think the practices of banks have improved quite dramatically. So the incidence of NPAs or credit cost should be much lower than earlier. And there is huge regulatory protection. You just can't set up a bank overnight. There is a regulatory protection to existing players, and therefore there is this moat. Having said that, I think this near-term moves of 2000 note and all, I don't think there is any merit in becoming positive or negative because of that. But structurally, for the next 3-4 years, if the economy, as I said, is to grow from 3 trillion to 6-7 trillion, I think financial services will play a major role and will continue to be quite constructive on the bank. The only thing is bank on names where there is good brand name, because from a banking perspective, deposits as well as cost of deposits is the raw material. And the better you are there, the more competitive you become.
Sunil, you bought very differentiated IT names in the past, and one classic call has been, let's say, Root Mobile, which has done rather well for you. Now I can see there is ICICI Securities, which is a blend on both financial services and technology. Since everybody knows that the nature of the economy is moving more towards digital, what is the best way to participate in it?
I think every business, irrespective of which business you are in, will have to have a digital strategy. So I think more than what is the best way to participate, Nikunj, one has to be very clear that stay away from companies which will not adapt themselves to embracing this truth. You mentioned about EVs. I think EVs, even if there are no direct plays, at least avoid companies which will get impacted because of the EV play. I think similar is the case with digital. Having said that, obviously there are quite a few good names which got listed, and hats off to them for creating businesses out of nowhere, hiring hundreds and thousands and lakhs of people in India. But a lot of them don't fall into our criteria of being profit making and having decent return on capital employed. And therefore we tend to avoid, we don't understand those businesses. But I'm very sure that there are other smarter fund managers who would understand those businesses. So I think from an investor's perspective, depending on their risk appetite and depending on their philosophy, there are quite a few names available where they can definitely look at investing.
Is it a good time to revisit large cap IT, the classic? Buy them at the time of downturn, sell them at the time of upturn. Is the downturn enough? Are valuations attractive enough to go back to large cap IT?
No, it sometimes, when you listen to the technology experts, it is a little scary, particularly for financial people like me at least. When they talk about this chat GPT and AI and all taking away jobs. But then I'm reminded right from the last 50 years, starting from the movie Naya Daur, where in a village the tangewalas get threatened by the motor bus which comes in. To the computerization which happened and Indian bank employees went on strike, to even Y2K and post Y2K and so on and so forth. I think Indian IT services is one sector which is globally competitive. We discussed that every company needs to have a digital strategy, and there is going to be huge opportunity for Indian IT services companies there. Yes, in the near term, we don't know. It is possible that 1 or 2 quarters, the growth rates might be not as good as they used to be earlier. But these are companies which make decent money. As I said, they are globally competitive. and they have almost 100% cash conversion of profit, and they distribute almost 80-90% of that. In fact, if you actually see year to date, there are so many IT services companies which have gone up like 30-40% on the mid cap side. And even in large caps, there are quite a few IT services companies which have done much better than the Nifty. So despite all these concerns and slowdown and so on and so forth, I think the sector has done relatively well year to date. Yes, on a 1 year basis, it has underperformed because the previous 1 year it had done very, very well. But, the prices are not indicating, I would say, a horror show. In fact, they are indicating that if things settle down, there might be an upside surprise here. So we are not extraordinarily overweight, but we are not underweight also.
Sunil Singhania there giving us his overall view on the markets. He doesn't think that the markets will come down in a hurry and that the appetite for equities remains strong. EV is an emerging theme, lots of opportunities there. Financial services, banks will continue to play a major role, and he continues to reiterate that one should stick to large quality names in banks, and that and one needs to have a decent allocation to the entire financials space.